It may seem like stock splits are all the rage these days, especially with Nvidia announcing a split earlier this year. But are we really seeing more stock splits than before? The answer is both yes and no. A stock split is when you increase the number of shares outstanding and in doing so lower the stock price. So let's say you have a stock that's trading at $1,000 a share. If you did a 10-for-1 split, you would suddenly have 10 shares of that company and each one would be trading for $100. When companies announce a stock split, you hear a lot of the same things. They say we want to make our share price more accessible, it's gotten too high, if we lower the price it'll be more attractive to a wider range of investors. Nvidia's stock split announcement in May got a lot of attention, but Chipotle actually led the way this year, announcing in March that it was going to do a 50-for-1 stock split. The company said that is one of the biggest in New York Stock Exchange history. Then, after Nvidia, you had fellow AI giant Broadcom, which announced a 10-for-1 split of its own. That has investors excited that more tech companies could be following suit with splits. So let's take a look at this chart. There have been 12 stock split announcements in the S&P 500 so far this year. That's already way more than we saw last year when there was only one announcement. And if we continue at this pace, we'd see about 17 stock split announcements for 2024, the highest level since 2007. You might think that's a lot, but back in the late 90s, we were seeing 80 to 90 stock split announcements a year. Then there was a much bigger focus on making stock prices accessible. Now it's pretty common to do fractional trading, so if you don't have $1,000 to spend on a $1,000 stock, you can just buy a piece of it. But that wasn't really commonplace for regular investors back in the 90s. So companies thought the perfect solution was to split the price and make it more accessible. So will we ever see stock split levels like in the 90s? Probably not. Technology has solved many of the problems that made splits so appealing, but it does seem like we're going to see a pickup relative to recent levels, and for investors that may seem exciting. It's worth bearing in mind, though, that stock splits don't end up impacting performance over the long run. At the end of the day, a stock's price might change, but the overall value of the company stays the same.